Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all, as promised, around 4 p.m. Hopefully, your investment and trading journey is going pretty well and you're doing well with your investment bets, with your trading bets. And those who are probably shorting in this market might be gaining a little bit more than somebody who is going long in this market, and the market is looking a little fragile. So today I would like to talk to you about a very interesting topic, and this is a message that came in from one of my patron members, which had who had a very interesting query. So we'll discuss about that, and I'll also talk about the markets and answer your queries as well. Sayed Tariq, a very good afternoon to you. I hope you're doing well. Let more people join in, and then I'll discuss about this interesting question that came in. And it's quite an obvious question. That is quite expectable that such a question, it's expected that such a question would kick in, but it's the answer would be quite interesting as well. So, afternoon, Mr. Pawar. Thanks for all the support that you people are giving me through YouTube, through Patreon. Whoever who watches the video, do subscribe to my channel. Good afternoon, Anirudh. FIFA Giant, a very good afternoon. I hope you're doing well. Uh, so India did get away with a 2-0 win over Cambodia. So let's see how they do against Hong Kong and the other opponents in their group, especially Afghanistan, which looked out of sorts against Hong Kong. So we'll see that. So Nazir, hi to you. Uh, so a lot of things that are going on in the market, and probably market is sensing more rate hikes going forward. So I'll discuss about that in a bit. Let's just discuss about the market technicals a little bit. So the markets at the moment are in a bear grip. There's no two ways about it. Somebody asked me about 2 3 weeks back that what do you think would be the range for the market, and I said it was around 15,800 to 16,800, and that is how it seems to be. So we are looking at a scenario where the market could head, or Nifty could head below 16,000. In that kind of a scenario, you could, if you are a more than 1 year, 2 year, say 1.5, 2 year kind of investor, you can buy into stocks. Uh, if you are less than that, having a time frame less than that, then probably you can wait till August. Even with the kind of market that I'm looking at, the duration keeps extending. So I was thinking that by June we would find some clarity with respect to market bottoming out. It seems like that we could stretch that further to late August, so probably another 2.5 months. It doesn't look good. It's simply, through my experience of around 10 11 years being in market, it doesn't look like that the market is ready to bottom out in the next couple of weeks or so. We could see short term rallies, 2 3 days rallies, and then the stock prices going back to where they were. So if you are extremely nimble footed, if you are able to make money by buying something today for 3 4 days, you make around 7 8%. You are able to sell that, sensing that the stock would fall, not that sell that another stock goes up 20 30%. That's not great trading. But if you can sell that stock and that stock then goes down in the next couple of days, 3 days, well, good luck to you. You can make money. But in this market, for most of the retail participants, I would say that if you are buying into very good quality stocks, stick with them through a duration of 12 to 15 months. You will gain a lot after that. So there could be pain for the next few months, and then after 15 months, when you'll take out the money, or when you look at the screen, look at your portfolio, you will see how good, I mean, your investments have been. But your stocks have to be top class, and by top class I mean debt free, high growth companies, uh, which are less affected by the current economic conditions that India is facing with high interest rates, etc. uh, Taking forward the same point, I would like to say that the question that came in was quite similar. So the question was interesting. Suppose you have a stock in your portfolio, whatever stock, suppose ABC, and that ABC company you know is going to be a multi bagger over the next 5 years. You know that over the next 4 or 5 years, the company is going to do great things. It's coming at very interesting valuation, very attractive valuations. The growth is good, profit growth is good. Everything, it looks set for the stock to perform, and yet the stock is not performing. Numbers are coming in for the last 4 or 5 months, it is not performing. You have bought the stock, you're waiting for the stock to perform. It's not doing for at least 2 quarters, 3 quarters. Then it comes to a situation that the query was whether the stock will ever perform or not, even if the numbers keep on coming. That was the query. And how long do somebody have to wait? Or if somebody is bullish on a particular stock, let's take this question in a different manner. Suppose that ABC company, everybody knows about it, that's trading at say one time sales, trading at only 10 times or 12 times earnings, current earnings, and the PE for the market for that sector is around 40, 50, and yet the stock is not moving and everybody knows about it. Suppose the IPO came in 3 years back and everybody knew it was a great IPO and the business is good, it's a growth of 30%, top line, bottom line, everything is good about it. Yet the stock is not performing for 8 months, 9 months, 1 year, and the stock is still trading at one time sales, still trading at 12 times earnings. Yes, the earnings have grown, so the stock has grown by around 10-15%, but it's not turning out to be that multi bagger kind of a darling stock uh, that a lot of people thought about. Then what will be the future? What will happen in the next 3 years? Will that trend continue? Will that stock remain there or not? That was the question. Actually, it was a stock specific question on a particular stock that I will not disclose as to which stock that was, but that was the question. So I'll give you examples, and I'll give you one example stock that I am holding, and one example of a stock that I am not holding. I held before, but I am not holding at the moment, and what I feel about this query, and what is my answer to it through my experience, through my last 10 years, what I have found out. So, coming back to the point of the market, and then you'll understand about this question as well. Over the last 10 years, we have had, at least, if I recall, from 2011 February till 2012 or 2011 December, around 8 9 months of complete, you can say, pandemonium on the market. The market did not do anything, and first it was complete collapse, and then the market did not do anything for a year. Then from 2012 Feb till April it went up very sharply, and then again went into a slumber between 2012 April to 2013 August. So a period between 2011 January to 2013 August was such that if you had put in money in 2010 December, you would have made at least 20% less if you had put in Nifty, and at least 35-40% less if you would have put in into mid and small cap companies, even if they were good quality. But then from 2013 August till 2015 December, for the next 2 years and 2 months, the market went up so much, especially the broader market, especially the small caps, that you would have at least made 10x on that stock, at least 10x, if not more. That was the kind of humongous rally we had before this government came in for the first time. If I may put it into perspective, Tata Steel was at 190. If I may put it into perspective, something like a V-Guard was around 20, 30, 25 rupees or so. There were many chemical companies that were completely dirt cheap. There were many consumer companies which are very expensive right now. It looks like expensive, were coming at very, very attractive levels. I remember in 2013, Asian Paints coming at around 550, 580 rupees. I mean, Asian Paints has gone from those 550, 580. all the way to 3,000, and is now at 2,500, and people are saying that it's doomsday for the company and all that. But it's already 4 5x in that period, and I'm talking of large stocks. Reliance was nowhere to be seen. Reliance had a market cap, I think, at least half of what it is today, at least, if not less than that. I mean, smaller companies, they were non-existent virtually. So something like a Tanla was always there, but it was at 8 rupees or 7 rupees, something of that sort, 5 7 rupees also. And there were other smaller companies. So basically what I want to say here is that if you look at that period between 2011 January 2013 August, there was at least one sector, that was pharmaceutical, that did exceedingly well, and IT, with TCS being a mid cap, became a very large cap. And the mid cap IT stocks, just every IT stocks went up very sharply in that period because of being export oriented in nature. That was one phase. The second phase was very short term, 2016 Jan and Feb, when complete collapse of the market happened and everybody wanted to run away from the market, including me. I did sell everything, and I must confess here, by mid February, and had to buy everything on the 1st of March. And yes, glad I did that, because from 1st of March of 2016 till about September, October, we made a good amount of money. And yes, then we had that GST period in 16 November, and then a little bit of fall, but in 17 we did extremely well. Then we had this again phase of 18 till 20, another 2 years 2 months. So normally 2 years 2 months is a broader, longest bear kind of a market for mid and small cap companies that we could think of. And after that we see humongous rally. If this phase is more than 2 years, then we see a humongous rally. If the phase is around 18 months, which I feel this will be, no more than 16 to 18 months, then the rally will be small. Rally will not be so big, but it will last longer. But the rally will not be so big like we had in 2020 March, from 2020 March. So basically, what I want to say here from this example is that you have to be very convinced with your company. That's the first thing. If you're very convinced about your company that the earnings will come, I'm not talking of the stock price move, but the earnings will be more than 25% CAGR for the next 3 4 years. Top line will be more than 30% CAGR for the next 3 4 years, and it's going to do extremely well, or at least much better than what the industry is doing. Then you can be rest assured that over a 3 year period, I'm not even talking of 5 year, over a 3 year period, from the last top that your stock has made, you will end up making a good amount of money. So giving you example, there are two companies. One I hold, this is Mastech, trading at around 2,600 at a market cap of around 10,000, 9,500 crores, having sales of around 2,600 crores, if I'm not wrong, or around 3,000 crores, something like that. But growing at around 25% on the bottom line, 25 30% on the top line, doing extremely well, but trading at a valuation. I mean, for next year's EPS of around 130 rupees, around 130 rupees it should come out with, is trading at 20 times 1 year forward, which is very, very reasonable from an IT perspective. I won't say it's extremely cheap, but very reasonable. So it can trade at 30 times, 35 times. And if you take 35 times on 130 rupees, you will understand that we are looking at a scenario where the stock could be trading at 4,000, closer to 4,000 rupees, and it's trading at 25 2,600. So if you have that conviction, maybe in 1 year time the stock will be at 3,000, but the earnings would have expanded. So in FY24, that same Mastech would have an EPS closer to 160 rupees. If it has an EPS of around 160 rupees, if you take 3,000 rupees as the price, then you are looking at a stock that is trading at under 20 times, something like 18 times or something like that. So, in that sense, we are in a situation where that particular stock, in my opinion, is extremely cheap. The valuations will keep on becoming cheap. And whenever there is a huge bull run in the mid cap IT market, which will happen in 1 year, 2 years, as I explained, around 14 months, 12, 14 months to 22 months, you'll have a strong rally. Then the stock will trade at 30, 35 times, 40 times, and that is where the earnings into that, you can say, PE, would end up having the stock higher by a much better margin than what it is today. For instance, a Mastec, 125 rupees say next year and 155 rupees for say FY24. Suppose the rally comes in late 23 and early 24, then at 150, rupees at 40 times, it could trade at easily 6,000 rupees. So what will happen? Say, and this is just a pure example. I'm not saying this is going to happen. I'm just saying that by 24 April or June, the stock would have made a high of 6,000 and may have come down. So the stock would have gone up from 2300 low to 6000 as the top, which is around 100 and something like 60% move from the lows that we saw just recently about a month back. From the lows in 2 years, in just 2 years. But for the better half of these 2 years, the stock would have not moved at all. So basically, this is a test of patience. Another example that I wanted to give, and this stock is not quite in my portfolio, but was in my portfolio earlier, but is not at the moment. But the stock is, in terms of all the company is doing extremely well, but the stock is not performing at all. So in this company as well, we are seeing that the earnings and profit growth is pretty good on the sales front as well, but the stock has not probably not probably done what it should have, or what it ought should have done over time. I'm talking of Loris Labs. So in Loris Labs case also, the kind of earnings that is going to perform, that is going to produce going forward, with the kind of new development that it has had, uh, we are going to see much better earnings than the 550 rupees that it is showing. So the stock should have been trading at 800, 900 rupees, but because of the market sentiment, it is not doing that. The earnings will keep on expanding, but the stock price, if it remains at 600, say for the next 1.5 years, earning expand by 25%, yet the stock price is at 600. So thus the earnings have gone up by around 60% over 2 years. The stock has moved up by about 10, 11%. So there will be a 70, 60, 70% move in the stock in that latter half of the second year. I hope you understand, in FY24. So that 70% move from 600 to say 1,020 will happen very quickly. So in all these cases, all the stocks in the market itself, the small cap index will come back and will fly along within months. You have to be patient. So basically, this is a game of patience. It is a game of whoever have has the patience. Now the question was whether my multi-bagger stock that I think is a multi-bagger stock do not perform at all, because everybody knows that it is going to be a multi-bagger and everybody is invested. Then what will happen? So basically what will happen, and I just give you an example, say from Mastec itself, people will get frustrated over this 1 year period that Mastec is not moving at all. Say 2500, 2600, it's not moving at all. 2800, you're making 10, 15%. Okay, let's take the profits, let's move out. A lot of people will do that. So eventually what will happen is that whatever the thesis has been in 2021 end, in 2021 October, will change by 2022 October. And that 1 year period, a lot of people would have exited that particular stock. And this is just an example. I'm not saying this stock is going to do very well or not, but they'll exit Mastec, and then the rally will happen when majority of the people would have exited. So this is a game where who has the biggest patience wins, and wins big, because the stock price is always slave of earnings. Yes, the stock may not move for 6 months, 12 months, 18 months maximum, as I explained with my previous example of 2011 to 13 and everything, maximum 18 months. But if for those 18 months, for those you can say 6 quarters, the numbers have been very good and the stock has not moved, then you should be ready for a huge move for the next 6 months. So that's the point. So if you have conviction on some of your mid caps that they are going to be big, they are doing well in terms of numbers, and they should trade at a particular valuation which they are not doing, then you should be ready for some pain for the next 6 months. So we have seen 8 months of pain already from 2021 October. So it has been 2 plus 5, 7. This is the eighth month. Say for the next 1 year, this happens. So that means 20 months. I think that is the maximum kind of a pain in a particular stock which has been growing its earnings more than 25%. You can see after that the stock has to come back. For example, say a Kilpest. I have Kilpest in my portfolio. It came out with around, it should come out with around 23, 24 rupees of earnings. Or for that matter, let's have a large cap stock. Let's say, for example, an Asian Paints, again a stock that I have in my portfolio. It has an EPS of around 32 rupees. It's trading at around 85 times at the moment. It normally trades at around 100 times normally, and it comes down to around 80 times, at sometimes around 75 times earnings. This is because of the pedigree of the stock. Suppose it keeps at 25, 2600 for the next 2 years. Suppose it doesn't do anything for the next 2 years at 2600, the earnings keep expanding at around 15%. I'm not saying huge, but 15%, which means a expansion of around 32% on the earning. It goes to around 42 rupees, around 42, 43 rupees. At 2600, at 43 rupees or 42 and a half rupees, it will be trading at around 60 times. It's not trading at 80 times now, although the stock will be at 2600. Now, my point is, will the stock stay there at 2600 even after seeing those earnings? I don't think that will happen. Then what will happen? A re-rating will happen, and people will say that okay, in FY24 they have done 43 rupees overall, and now the market is doing well. Now the economy is doing well. Now we have had the rate hikes we have had to add over the next 2 years, and now economy will pick up. So what will happen? Next year's earnings should be around 20% growth. So the earnings will go up by around, say, from 43, it should go to 52 rupees. So people will say, let's have this stock at 52 rupees times 100, FY25 numbers. So by October of 2024, on 52 rupees of earnings, we could be seeing the stock at 5200 and not at 2600. So what has happened? October 2024, and today is May 20 or June 2022. In just about 2.5 years, the stock doubles from these levels, and yet people will say it is expensive, it is very expensive, and this and that 100 times cannot trade here, it should trade at 70 times. It will come back to 70 times, but it will come back to 70 times after 4 years, when the earnings would have grown to even further levels, something like you can say you add another 40% on 52 rupees, around 72 rupees. So it's back to 5000. You get it? So basically, this is how the cycle works. You have to be patient. You have to be with companies which are producing very good earnings growth and are debt free. That's it. The price will take care of itself and you will end up making money. Most stocks that are performing well, most companies that are performing well on the numbers front do well in a period between 2 to 3 years. So if you hold those stocks in that period between 1.5 to 3 years, you'll make a lot of money. And that is what I am doing. That is what I have learned. That is what I did in 2018 to 21 period. That is what I did in 2012 to 15 period. So 2 to 3 years. That is why I keep saying in my previous videos, you can probably check my previous videos, that how much money should somebody have if somebody wants to trade or invest full time. They should have 3 years of earnings, 2 to 3 years of earning, 2 to 3 years of earnings in their bank balance, in their bank account, so that they are not worried that they have to make money every 2 months, every month. Then only you can be freely investing or trading in the market. 2.5 to 3 years of money you should be having. All right, guys, I hope you have understood my point. So basically, this market may test you for another year maximum. I believe it should be no more than 6 8 months, 6 to 7 months, and then you'll have a very good rally because the valuations will become very attractive. Now I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Sankalp, see, it will only break out when it takes out 470, 480. There's a long way to go. I think it is a very good long term bet at around 340. Kilpest is very, very attractive. It will have an EPS of 23 rupees next year. It should do well. As you said about market condition, is it safe to put money in heavyweights like Asian Paints and wait for 2 3 months for upward movement of market? I said wait for two years, wait for 1 year at least. So I'm not saying that in the next 3 months something like Asian Paints or HUL or a Dabur or a Reliance or TCS will do well. I'm saying that whatever you are invested into, if they are good quality companies, have patience for at least a year. I don't think a 3 month trade will work in this market. Okay. See, Stovecraft, I won't say you average, you hold for 2 years, but do not average, do not buy more. Okay. Okay, so your price is 210. See, there's no other option but to hold. One positive thing I can tell you is that I have gone through the con call of the management. I hold the stock as well. So that's a disclaimer. I believe the stock should reach 200 in the next 18 months, if not 12 months. So they could be at least, I mean, in the next 12 months, it should do that. But in 18 months, it should be around 210, 220. If you can hold 18 months, hold. If you can't, then you exit the stock at these levels. No, I think avoid CDSL. I feel that CDSL was a play on NSC listing, sorry, BSC listing, LIC listing, and then many other things, whatever listings have come up. See, stocks like CDSL will do well when market conditions are very, very good. Then you can make 40 50% in that stock very quickly. Otherwise, do not invest long term into such stocks. See, NRB Bearings is good. NRB Bearing is one of the better auto ancillary companies, along with Motherson Sumi, Jamna Auto, Endurance Tech. I think in the auto ancillary space also next year should be good. I said in 2021 that 22 will be good, but there are a lot of issues with auto industry. But whenever it gets resolved, I think this whole sector will do well, much better than the market, extremely good, because the valuations are very attractive in all stocks. See, you can buy Sequent here, but Sequent Scientific, but you have to have a 2 year time frame. This could very well go to 85, 86. I'm not ruling that out because the margins have dropped very sharply. But I believe from next result onwards, things should look up. Okay. Aegis Logistic is again good from a 18-month point of view. Yes, you can see some downside. See, overall in the market, I see that there could be some downside of around 10%. So that's why I'm very cautious on fresh buying anything, buying fresh. And if you're holding on to these stocks, you can definitely hold. All right, guys. Thank you. Thanks a lot for being online. Please do like my like and subscribe to my channel. Hit the bell icon so you get my video straight away when I post it. And kindly do support me on Patreon. Thank you.